Today we saw high volume selling in the stock market. Is the SP 500 trying to roll over and die? First up, let's take a look at the SP 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today is going to be a special update, and I'm going to spend a lot of time talking about today's price action because I want to make sure you're well informed on exactly what just happened with today's price action. So first things first, we did see an increase in volume on a selling day, and we did close near the low of the day after a very sharp rejection from our resistance trend line. And remember, just yesterday we closed right at resistance at SPY 414. So this is going to be the perfect opportunity for the bears to try to reject the price action and break it down below support. So with high volume selling and a bearish candle on increasing volume, and we're coming right down to critical support, there is a good chance the market could be trying to roll over, which means we're going to lose that support at SPY 407 and start trending back down towards this other support level right around 400. And possibly even a retest of the 200 daily moving average around 393. So what I want you to be aware of is that today we did get the PPI data report, and it is now projected that the rates for the year 2023 are going to be an additional 25 basis points higher than originally expected. Now I know this is a technical analysis channel, but this is very important to understand because this just changed today. If you look here in the bottom of your screen, you can see the chances of a 525 to 550 basis point hike. We're only 6.2% at the beginning of the year, and that has been rising every single week and month that goes by. And we went from 6% to 34% up to 46% and now 48.9%. So the reason this is significant is because the market is now pricing in the possibility of higher rate hikes, which means that it is not already priced into the market. Remember, the market is forward looking, so if it thinks something is changing that it has not yet considered, there is going to be the possibility the price action has to account for it. So just keep in mind the chances of more rate hikes are now increasing, and the market could be reacting to that. So if we go back over to the chart of SPY and we're looking at the price action, you can see the price action is very clearly reacting to that news, and we are getting the high volume selling, and we have not yet broken down through support. So if you're following price action and we break support, that means you instantly need to get risk off. Remember, I've been telling you this is a bull trend and stay on the bull as long as we're in the bull trend. But that is going to instantly change if we break down through support, because that means the bull trend is weakening, and then we could see a lot more liquidation as longs exit, which is going to mean even more high volume selling as we slice through support and go down for the next leg lower. So if we do get the breakdown below support, we're looking for that next leg lower at SPY 400 and then 393. And you're only going to know this is happening by following the price action. Don't just go into tomorrow assuming support is going to break. Wait until the price action confirms it, because there's still the possibility we bounce from this support, and even with the extra rate hikes, the market shakes it off and continues to climb the wall of worry, and we bounce from support at SPY 407 and start marching higher towards the gap fill at 421. So don't just assume that it's obvious we're going lower. That is a very rookie mistake. Wait for the price action to confirm it, and you have a very solid trade plan from the risk level at SPY 407, whether we bounce and go higher or break through it and go lower. Remember, you are a retail trader and you can hit a single button and liquidate your entire portfolio. You are not a smart money trader that takes weeks and months to accumulate and distribute their position before they can make a major move. You have the flexibility of changing your entire portfolio with the click of a button. So don't be hard-headed. If we lose support and you're long on this market, you need to reduce your risk. And if you're shorting this market and we bounce off support, you also instantly need to reduce your short exposure. Do not make the mistake of messing this up, because this is a very simple trade plan, and that is why I'm spending extra time going over it with you. This is a major shift in market sentiment if we lose support and it looks like we're going to get more rate hikes. So use the price action guideline at that break of support or bounce off support at SPY 407. Now keep in mind the critical resistance up here is still SPY 414. So if you want to remain short on this market and you're already in a short position, you need to manage your risk around that critical resistance at SPY 414, because if we break out above that level, we are very likely going into the 420s. So just view this as a trading range between SPY 407 and 414. Trade the range until we get the breakout, and then once we get the breakout, you know the next leg higher is 421, or the breakdown below support, the next leg lower is 400. So just follow price action and let it guide you on where we're going from here, and just be aware of the possibility that we could be very close to losing this bull trend if we continue to see high volume selling. Jumping over to the NASDAQ 100 triple Qs, we were down 1.88%. And again, you can see the triple Qs got rejected from the bottom of the support trendline breakdown. and we did get a bearish close at the very bottom of the candle on higher volume selling, and we are getting very close to the rising 20 daily moving average, which is right around 299. So just like SPY, you have a very well-defined risk level on the triple Qs anywhere between 299 and about 301. And if we lose that support, we're coming back down towards the neckline breakout, which is that level at 294. Remember, this is still a bullish pattern of a double bottom breakout from the double bottom off 260 as long as we're above 294, but that does not mean that we will not come back down and retest that breakout before going any higher. So there is going to be the possibility in the short term that we are going lower before we go any higher. That goes hand in hand with what we're seeing in the price action and the increase in selling, and we did lose the support trend line. So your next trigger to go short is either a breakdown below 299 or just shorting up against that resistance right around 308 until we break above it. So you make your own trade plan and you manage your own risk. I'm just helping you understand where the price action could be heading. And right now, if we break down below this support right around 299, we could be going to 294. And then if we break 294, we're looking for the gap fill right around 288. So let the price action guide your trading, and the resistance to break will be between 308 and 309. And then if we can slice through that resistance, we should start marching higher towards the gap fill at 322. On the Dow Jones, we were down 1.25%, and again increasing selling as we get rejected from that resistance around 343. And now we're back down within the triangle, which means we could be coming back down towards 334. This is still a bull flag when it's all said and done, but we don't know when it's going to break out, and we don't know if we're going to revisit 327 before we go any higher. So right now you need to be a lot more cautious while we're trading below 339, because if we break 334, we're likely coming down to 327. The bull breakouts will be above 343 and 346, and then we'll be off to the races to run into the 350s. On the Russell 2000 IWM ETF, we were down 0.96% today, and you can see the Russell 2000 is still closing above the rising 20 daily moving average and still has the bull trend, but that can change very quickly if we see a continuation of today's selling and we break down through this support right around 191, and then we have critical support at 188 all the way down to about the gap fill at 180. But we will need to break this other support right around 185. So just keep in mind, this rejection could be day one of a sell-off, and that is going to be from this resistance right around 195. Now, if we do break resistance at 195, the next level higher will be 198, and then we have price targets in the low 200s. But you cannot get overly bullish while we're trading below that resistance at 195 and just saw a sharp rejection from it. On the ARKK ETF, we were down 2.78% today, and ARKK is looking bearish currently because we're getting rejected below the support trendline breakdown, which is this resistance right around 43. So if we do break down below the support at 41.6, we could be well on our way for the next leg lower back down towards 38. You're also going to have support right around 40.4, but if we start losing that support, look out below because we could be going much lower. And it is still possible with the higher volume selling that ARKK is trying to make another leg lower. The upside resistance to break will be right around 43, and then 44.5 and 45.7. On the VIX, we were up 10.65% as the VIX is now spiking back above 20 after just getting crushed back down below it. So we need to instantly be a lot more cautious with the VIX spiking and sitting at critical support in SPY. Remember, VIX above 20 is going to tell us fears coming back into the market, so we need to instantly be a lot more cautious. If we see the VIX getting crushed back down below 20 and maintaining the bull trend by bouncing off support, you can stay on the bull and just manage your risk around that support level. On Bitcoin, we're currently up about 0.86%, and Bitcoin is running into that critical resistance zone between 24,400 and 25,000. And this is exactly where Bitcoin is likely going to start stalling out and getting ready to roll over and go through a correction. It doesn't guarantee it will, but there's a good chance from here this could have been a bull trap, because it does look like we could be finishing this impulse higher and getting ready to go through a correction. That correction will likely take us back down towards the 200 daily moving average right around 19,600. So if you miss this move, I do not suggest chasing it because it is very likely just now finishing out the bull trend and getting ready to go through a correction. On Amazon stock, we were down 2.98%, and Amazon is getting rejected below that critical resistance at 102 and came back down towards the critical support between 97 and 98. We lose support, we're coming back down towards 94 and the gap fill at 90. And we're only getting bullish once we break the resistance at 102, because that means we could start marching higher towards 109 to 115. On Microsoft stock, we were down 2.66%, and we did lose the support at 267, and we did fill the gap below at 264, but we are looking like a bearish close right on top of the 13 EMA. So if we continue lower tomorrow, we'll be looking for the gap fill at 258. You can get more bullish on a break above 267, but we still have strong resistance up there at 274. On Nvidia stock, we were down 3.35% today and we lost the support trend line, and we are getting rejected around that resistance zone between 227 and the gap fill above 230, which means we could be coming back down towards support at 213. If we lose support at 213, this looks like a bearish double top, which means we could be coming all the way back down to 192. On Tesla stock, we were down 5.69%, and Tesla is starting to look like it's going through some high volume selling. And it does look like we're getting rejected just below that negatively sloping 200 daily moving average, and we're back down below support at 204, which means we're likely coming back down towards 196 or this critical support around 183. Now keep in mind, 183 is a very strong support because we have a ton of support, including the rising 20 daily moving average. So if we do come all the way back down to this support level, I do expect it to hold as we see high volume buying, and that should be enough of a dip to send us back up higher towards our price target at 230. On Apple stock, we were down 1.04% after Apple did hit the critical resistance at 156 and instantly got rejected, even though we still are closing above all the moving averages and still have the bull trend. A further rejection from resistance could send us back down towards support at 150, and then below 150, we're looking for support around 148, and the gap closed just below 147. On the financials, we were down 1.01% as we closed right on top of the rising 20 daily moving average and the breakout of support, but so far we are maintaining the bull trend. If the financials roll over and die, that's going to be bearish for the indices. On the industrials, we were down 1.03%. Price action is still above the rising 20 daily moving average, but it's definitely looking like we're going through some type of resistance around this double top zone around 103. On the healthcare sector, we were down 1% today, and the rejection from 134 brought us all the way back down towards our support at 130.5. So from here, we need to see a sharp bounce and we need to break that resistance at 134, and then we can get bullish in the healthcare sector. The energy sector was down 0.98% after getting rejected below the support, which is right here at the resistance at 89, and this could send us down lower towards our rising 200 daily moving average at 82.6. So jumping back over to the S&P 500, do not take it lightly that we're seeing high volume selling right on top of critical support. So if we gap down and lose the support in the morning, we can continue to see high volume selling. Remember, if you need help trading in this market, we are absolutely crushing this market in the Stocks Channel Discord, and we spent a lot of the day just loading up on short positions because we saw the price action and we knew there was a very good chance we were going to roll over from resistance and come back down to support. Trading price action and managing your risk are the best way to be a profitable trader. So if you want to come check out the trading Discord community, you can find out how to join the Stocks Channel Trading Discord community by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. So if you're wanting help in this market or want to come trade with the community, you can find out how to join Bank or the Stocks Channel Discord by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.